Could a trade war and a potential recession be exactly what we need to finally lower rates and home prices and give home buyers that have been waiting the opportunity they've been waiting for? Well, that's the question I'm asking this week, so let's get into it. And we'll be back in 3, 2, 1, we gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dekimbe Smith, and this week we are sipping on some good old black coffee again and trying to figure out what has been going on these last couple of weeks. All right, since the last time I spoke to you guys, mortgage rates have come down a little bit, not a lot. They've come down a little bit. We seem to be in a trade war with all of our biggest partners, from Canada to Mexico to China, and it's just full steam ahead right now, right? Things don't seem to be slowing up. And like I said last time, if the year keeps going like this, we're going to have a lot to talk about and a lot to pay attention to, especially, like I said, if you're on the train trying to improve your finances, potentially trying to buy a home this year or next year, there's some things we got to pay attention to. So those are things we're going to be talking about. Now, let's start off with where we're feeling a lot of pain right now. We've been talking about over the past couple of months, mortgage rates have not come down. They've been pretty stagnant. And that's because the Fed is still pretty clear in saying, like, you know what? Things are good where they're at. We don't feel any reason to continue to cut rates. The economy is holding strong. Consumer confidence is holding strong. But as of lately, it looks like that might be shaken up, right? The last time the Fed came up and spoke on these things, he said, you know what? I'm not really clear on what's going to be going on this year. You know, we still have to figure out what Trump's policies are, how his executive orders, how his new policies are going to affect the economy. And those are things that we have to wait for. But now when you look over at what, like, Wall Street and people who trade, you know, some of these, based on some of the news that they see when this guy comes up and speaks, they're expecting us to get about 3 rate cuts later this year, starting around June and July. So what does that mean for us, right? So that means that we might start seeing that cutback on those rates, because later on in the year, we might see prices continue to go up. We might see consumer spending going down because people just are uncertain about what is going on in their own day-to-day lives, right? We're seeing job cuts. We're seeing, you know, a lot of federal cuts, and people are starting to ask the question, okay, well, is this a time for me to be spending money, or is it a time for me to be saving money? And usually at that time when people stop spending is when you're going to see those rates starting to come back down, right? Because they need to incentivize people to say, like, okay, well, what do we do now that, you know, the economy is starting to slow down? How can we incentivize people to go out there and create more opportunities for people to buy, for people to invest in certain things? So lower rates are usually going to be in the environment for that. But Dekimbe, if things are uncertain and people are holding on to their money, who's going to be able to capitalize when rates get cut down? Well, like I said, that's the thing I'm paying attention to, because if we're not paying attention right now and saying, okay, well, if rates are going to be coming down, and none of us have a crystal ball, right? So I want to say that. But if rates are going to be coming down later on in the year, if things continue to get shaken up with, you know, the way inflation's going, the way this trade war is going with other countries, what do I need to do to be ready? Well, like I said, we need to make sure we're saving money. So when that opportunity does come and you say, okay, let me go ahead and start going through the process about buying the home, I need to make sure that I have a certain amount of money set aside so that I can come and strike, because that's not the time when rates cut and say, like, okay, let me go ahead and save, you know, 10,000, 15,000, 5,000, whatever it is that you need to come to the table with, because at that point it's too late. Somebody's already, you know, been doing the work over the last 6 months and they're ready for this opportunity. Same thing goes on the credit side, right? As we go through this time where the economy starts getting tougher and, you know, lenders start saying, okay, well, what's really going on, right? Are people still going to be able to pay these bills, afford the mortgages that we're giving them? You might see some of these requirements get more strict, right? Just like how you're seeing with insurance policies because of what's going on with wildfires and floods across the country. It's the same thing that starts happening with when it comes to lending, right? With the mortgage industry. If things start shaking up and they're saying, okay, well, there's more people losing their jobs, we're not sure if they're going to be able to keep these payments up, if we're seeing more delinquencies on payments like we're seeing with FHA loans, then they're going to say, okay, we might have to, you know, increase our credit requirements. We might need to, you know, double check what their debt to income really looks like and say, okay, well, that person's carrying a lot of debt. And if one thing happens after they get in this home, you know, if they lose their job in a month, or if they're unable to maintain these payments because we're giving them a whole nother mortgage, the chances of you getting approved for this automatically gets cut down significantly, right? And that's where you really just want to say, like, okay, how am I preparing myself with all this news and all this doom and gloom that's going on around me? What do I need to be focused on? And like I said, a lot of people who listen to this are probably going to be in that position where they're buying their first home. You might be renting right now, and you're considering and saying, okay, well, what's the move I should make? And for me personally, like, this is what I would recommend, right? Based on the people I'm working with, based on things I'm doing myself, these are the areas where I'm like, okay, let me focus, make sure I have my nest egg secure So whatever opportunities do come up, right, whether that be investing in a home or investing in the stock market, I have an actual, fund to pull from, because like I've also been transparent with before with you guys, it's not fun when you don't have a fund to pull from, right? Whether that be for emergencies or to take advantage of opportunities, you need to be prepared. And that's the thing I'm always stressing, kind of also talking to, like my younger self, people, who might be close to me, who are a little bit younger, and saying, okay, well, you know what, let me listen and see what he's doing. Take that piece of advice and really think about it, because like I said, I think the rest of this year is going to be pretty shaky. I'm not going to say it's going to be a complete crash out of a year, right? I think we're still going to have some stability. I don't think Trump wants to just throw it all down the gutter. But at the same time, I do think he is prepared to do what he thinks is necessary for his long-term goals, right? And if that means we need to experience a little bit more pain before we experience the benefits of what it is that he's putting out there, I think he's ready to do that. Just the other day, right, they were asking him, are you putting off the idea of a recession? And he said, you know what? He basically said, I don't have a crystal ball, but sometimes we got to do what we got to do, for the long-term benefit of society, for the long-term benefit of the country, and we're going to win, right? And it may not be pretty on how we get to the winning side, but we're going to get there. It was a very good answer from him, to basically say that a recession's not coming, but I'm also not putting the idea of a recession completely off. And that is something, like I said, when he is ramping up this battle right now with this trade war with countries like Canada, with countries like Mexico and China, he's all in. And like I said, just the other day, the deadlines for the tariffs that he imposed 30 days ago had expired, and they had to come back to the negotiating table and say, okay, well, what are we going to do now going forward? Are you going to stick to these tariffs, or are we going to actually be able to come up with a deal? Right? Places like Ontario are coming back and saying, well, if you want to charge us 25%, 50% on steel and aluminum, we're going to charge you 25% on your electricity that goes to places like New York, Michigan, right? Minnesota. And of course, these are like the places right next to the border, but New York is a major player, right, in our economy. And if these people are seeing, increases in their prices with everything else that's going on, it forces us to kind of have to say, okay, well, like what can we do, right? And that answer might be, well, no, we're going to stick to this 25% tariff on you, and they're going to put the 25% tariff on us, and this is the new playing field that we're at. So I don't know what's going on, right? I'm still learning a lot about what's going on with these tariffs now. I'm not a tariff expert, and I'm just trying to pay attention, dive into it a little bit more, do the research, see what the potential benefits, see what the potential consequences are from all of these things that are going on, right? Because I feel it's the only way for any of us to really know. So that's what I would recommend, right? Don't try to just put your head in the sand and, avoid some of these topics that you may be completely unfamiliar with. Have that curiosity, just like we're curious about making money, and building businesses and just having fun in our free time and doing whatever we want to do. Also be curious about some of these things that make you scratch your head and be like, yo, what are these people talking about? They're talking about tariffs on all these different supplies and stuff like that. Is this actually going to make things cheaper for us, or is it going to make it more expensive for us? Right? Just take it at a real simple level and go from that. Because that's how I approach a lot of things in life. And I personally feel like it's helped me a lot, just having that kind of childhood curiosity. Now as an adult, you would call it like your intellectual curiosity, and saying, okay, well, let me ask a few more questions. Let me dive into this a little bit more and really figure out like what's going on behind the scenes, because you'll realize sometimes it's not as complicated as people try to make it out to be. And when you start putting a couple things together, you can start answering some very simple questions in your mind and realize, okay, I kind of see where we're headed. So let me start making the right moves. So like I said before, I personally believe things are going to get worse before they get better. And I'm not saying that once again to make you sit there and panic and throw your hands up and be like, oh man, here we go. Another 4 years of, just a whole bunch of nonsense. Nope. I'm just saying that if we want to get back to a point where we do have mortgage rates at 5%, where home prices do come down a little bit, the economy is going to have to slow down, right? You're going to have to see less demand from buyers. You're going to have to see homes sitting a little bit longer. So sellers are saying, okay, well, I see that, things are not moving as fast as they used to. So maybe we do need to go ahead and kind of, make a couple concessions here and there. And this might be what it takes, because as of right now, like I said, we haven't seen any other solution in the last 4 years that have really worked. Things have pretty much been at a standstill across the board. And well, honestly, home prices have continued to go up. Mortgage rates have been at a standstill. So what is going to be the thing to make that give, right? And that's what we're trying to figure out through this episode, whether that's going to be the trade war, whether that's going to be a recession that finally gives the Fed the signal to say, okay, well, now is a good time for us to start reducing rates, because we're seeing the economic slowdown, right? We're seeing consumer confidence starting to go down. And these are the things that they're going to be looking at and saying, okay, well, all right, it's time to make a move. So like I said, we need to be prepared, making sure we're saving money, right? Like I said a couple weeks ago, make sure you're saving money in an actual like savings account, not something that is, paying you 0.8% or 0.5% of your money. Review the high yield savings accounts out there like American Express, Capital One, Ally Bank, those different ones where they actually give you, I think 3.5%, 4% right now at the time of this recording, because that's where you'll actually be able to keep up at least with, the rate of inflation, like what's going on. And you're not just going to be looking at, your money saying like, why did I make 10 cents this year on my money? Right. So simple things like that. And like I also said, review your credit, use websites like myfico.com, pull from annualcreditreport.com so you can actually see everything that's being reported to the credit bureaus and start consulting with those companies and saying, okay, well, what do I need to do to get these things changed? What do I need to do to improve my credit? Right. I think I'm going to make a video later on about, how I actually went ahead and uploaded my credit report to ChatGPT, because like I said, I want to continue to invest in real estate, continue to invest in different areas. And what I did was, I uploaded that and I was like, okay, I want to do X, Y, and Z by a certain date. So what would I need to improve on my report for me to get it up to a certain score? So maybe I'll make a video on that later on, tell you a little bit more about how I did that. But those are the kind of things I'm thinking about and looking at. So let me know what you guys are paying attention to. Let me know where your eyes are, really glued to right now when it comes to the financial markets, the housing markets. If you have certain questions about how you should be moving through this year, like I said, feel free to reach out to me. My contact info is always in the description. And let's talk about these things, right? Because you guys know I'm a very curious person. I'm very interested in everything that's going on here, and I like to have these good thought-provoking conversations. So until next time, stay tuned, stay curious, and as always, enjoy your first sip.